Meanwhile, the World Bank board has approved a loan of $1.5 billion. That's to support structural reforms in South Africa. But the bank says that the loan will help address the twin economic challenges of low growth and high unemployment by easing infrastructure constraints in the energy and the freight transport sectors. Now, the challenges in the energy and the logistics sectors, they've also severely impacted businesses and households, holding back economic activity. In a statement, the World Bank says it supports reforms which tackle long-standing bottlenecks. It also says that the government of South Africa is committed to modernize state-owned enterprises, also open the power and freight transport sectors to provide sector competition and to attract new technologies and financing. The bank says the loan will support this drive to improve energy security by attracting investment in transmission, expanding grid access and enhancing municipal distribution. The World Bank believes these reforms could boost short-term GDP growth by 1% and 2 to 3% over the medium term, but also promote job creation at large. Economist Redge Nkosi is going to be joining us for more. Reggie, good evening and thank you for your time with us here on the SABC at this hour.
Thanks for having me.
Reggie, really, if we look at what's at stake here and what this really means, talk to us about the long-term economic growth and improved infrastructure, how that's going to be unlocked. And even if we're just looking at how the World Bank's involvement signals confidence in South Africa's reform agenda, adds momentum to these structural reforms, is that a boost in the right direction for us?
Well, I think if you follow the World Bank documentation, surely that is in the right direction. But whether that documentation and all this analysis is correct is another story, quite frankly. But if you want to go back in history and trace where all this is coming from, then perhaps this will give us a sense as to whether what the World Bank is saying is indeed correct and whether what the Treasury is doing is going to lift South Africa from the doldrums that we're experiencing right now into what they think is some sort of nirvana for us. In 2019, if you remember properly, around August, Tito Mboweni, using World Bank documents, IMF and the OECD, copied their work and produced what they thought was an economic strategy for South Africa. In fact, it was, in our view, a foreign agenda being imposed on South Africa through what they themselves knew as structural reforms. And South Africa eventually ended up doing that. In 2021, around June, South Africa signed, actually Treasury, signed a document called Country Partnership Framework. No debate was ever taken in this country or done in this country. We just got to have that document signed, committing South Africa to austerity, committing South Africa to structural reforms that we see today, the unbundling of Eskom, and indeed today, the unbundling of Transnet, and even going as far as working on issues of water. All these being privatized for the sake of the IMF and the European companies that are going to be involved, not necessarily to benefit South Africa. So the projections that they think will come, or they think will be realized in the coming future, is, in our view, quite misguided. If you, again, want to look back at the documents, when they were producing this, the country framework, partnership framework, they thought as soon as South Africa begins to restructure the economy, some 3% growth will be obtained by 2025. Where are we? It's almost 1% that we're seeing today in 2025. And whatever it is that they tell us about the future, quite frankly, is misguided and it's unlikely to come true.
Well, Reggie, thank you for those opening remarks, because there have been questions about whether this, will worsen our debt to GDP ratio, whether the country can in fact repay the loan and afford to repay the loan without increasing taxes or cutting on social spending. And then also just that compromise of our national sovereignty or policy dependence, that's just, going to be created given this dependency on international finance systems now. And I wonder, even in view of what you've just said, does it ultimately then also address or attempt to address the inequalities in our country, or does it exacerbate it? I'm asking this because of the terms and conditions, obviously, that this loan comes with, but whether it's also going to be safeguarded against misuse, abuse, and corruption.
Well, firstly, the inequality is going to grow insofar as we understand, and history tells us that whatever it is that the World Bank has done everywhere, nothing positive comes out of it. And why South Africa thinks that by coming up with a relationship with the World Bank and getting their money, therefore something different is going to come, is quite frankly a puzzle. In our view, we think that this is just part of the program of Cyril Ramaphosa, the president of this country, of handing over to the elite in this country and foreign elite the economy that should actually be in the hands of the locals. And with it, the poverty that will come certainly shouldn't surprise anyone going forward. Whether the money is going to be used correctly, I have no difficulty in that. I think that will be the case. And the repayment is okay. I mean, we are standing at about 75 or 76% GDP in terms of the debt ratio. Yeah. That's not necessarily big. We should be able to pay. The question is not even about paying. It is about how poor the country is going to be, and our growth of just about 1%, 2% will continue to linger for the next 10 years to come. And whether that is what you want as a consequence of inviting World Bank here is anybody's guess. To us, it's a mistake that South Africa should never have gotten into. And in fact, we must ask Parliament to reject this loan with contempt.
All right, thank you, Reggie, for speaking to the realistic outcomes of obviously what the implications of this all means for the country at large. If we are looking at the state of South Africa and, you know, what government should be prioritizing at this point, from your vantage point, what would you like to submit, even if we're just looking at government capacity to meet its targets, given its track record? Are you hopeful? Let's explore some of those possibilities and probabilities as well.
Well, firstly, we certainly need infrastructure, but this infrastructure should be built from our own funds. It's very, very easy to create our own money, like many countries do, and begin to invest in our own economy domestically, not invite foreigners who are now going to eventually capture us, or we're already captured anyway. And we don't need more of that. I think going into the future, we should continue to invest in industry, manufacturing, and transport, and so on, from our own capital base. Many South Africans continue to think, because they've been misled actually by the Reserve Bank and the Treasury, that we do not have money. We think that is fallacious, and South Africa can, in fact, create its own money and invest in itself. Therefore, growing the economy, growing the numbers of people in the employ, and I think our social status would certainly continue to expand as a consequence of using our own money, while obviously producing other positive effects right across the economy. This loan, as with the previous loan that we had in 2022, are simply yoking us back into the colonial times, and South Africa will not get out of it at all. I think we can do better by mobilizing our domestic finance and investing in the economy right across all sectors, including creating the jobs that we so much need to do right now.
Well, Reggie, it's certainly a conversation starter for more to come, but I'm going to leave us there for now. Thank you for weighing in and for your time. Economist Redge Nkosi weighing in. Of course, just following the news that the World Bank board has now approved $1.5 billion to support structural reforms in South Africa. Reggie weighing in and just looking at some of the ripple effects that's set to come as a result. But as we leave the conversation there,